Wake up, goddammit. This is MARKETcast with Unk and Market Monk. Morning, P. How's your week?
Really good. I traded upside up to QQQ had that 15-second tap at 304, which was my level, and then I pretty much went short after that on most things. So yeah, good week. One of those weeks that you just left a lot on the table, like a lot of people, but that was like cashing out at 150% on something that went 1,000%. But I mean, oh well, it's not something to really worry about. Really exciting week. I kind of like to see days like we had. I like to see levels tested on stocks I follow. My ideal trading day is to do really well in the morning and then go light and just study the rest of the day. So I was all about that. Um, some things didn't react how I thought they would. I was kind of bearish on silver. News completely changed the landscape there. Oil pulled back more than I thought. So just a really interesting week just to see how different things react to financial services. It's a sector that really touches everything, and I think we're seeing that play out.
Nice, nice. I was up 1,700% on couch time last week. Um, I'm still fighting it a little bit. It kicked my tail, whatever I caught. Um, from kind of the sidelines, I guess I was real shocked that my everything I had was kind of reeling. Most of my list was red all week, like my overall big list. It was just everything had a lot of downside. We started seeing the 15, 10, 15, 20% haircut days again on some things. But Spy was holding 400 all week until Thursday, and that I thought I really thought I was dreaming. Um,
Yeah.
I came back Thursday, traded a little bit. I haven't traded 10 shares in a long time. But I highly advise people when they get back in, you don't jump in the deep end of the pool. It's really, really smart to just take your time, get back into clicking buttons. So really, trading last week wasn't great for me. Um, but the overall market conditions were just really, really surprising in general. I don't know what was holding up the market Monday, Tuesday, Wednesday. I really don't.
Yeah. No, it was manipulated in the sense of giving whales time to get out of some stuff. It's kind of how I saw it,
That makes
just in
sense.
terms of how the flow was looking. Because they were, I think, anticipating a kind of next leg up to early February rally in quite a few things I was looking at, and then they repositioned. So a lot of repositioning happening.
It kind of
Um,
makes sense because volume wasn't bad, um,
yeah,
and that's where your volume would come from those bigger guys. They just have larger positions they need to move in and out of, but um, yeah, just
yeah,
really weird price action in some cases. I mean, I know I trade a lot of poopy crap, but just some weird price action, just interesting stuff throughout the week. The downside on some plays though, what stood out to me again, those 15-20% haircuts we haven't had in a while, and they definitely came back.
yeah. I think it's easy with the price of the stock to lose scope on what was happening. Like you take like Bank of America or Wells Fargo, $30 stock, a $40 stock. That price of that stock doesn't matter.
Yeah,
Those are massive companies, right? And
yeah,
so to have a 7% day when you have a market cap that large is pretty extraordinary to watch. And they weren't even. I mean, they were just kind of tangentially involved in this, but it was just a total sentiment thing with financial services. And you saw the regional banks, that regional bank ETF, KRE, I think it is,
mm-hmm.
just took a massive hit just because everyone's saying like, well, this Silicon Valley is not going to be the only one. This is like a contagion is that term they use. And so I said banks are telling you to be careful on Wednesday, I think, and you know they just all tanked after that. And I said it's not a 1 day thing, and then Friday happened. So was right on there. I looking back, could have gone all in puts on some of those, but it's not really my style. But we saw it impact some other things. One real quick note too. When you look at some of the stocks that ran really hard in early February and have already given it all back, that's a really bad sign for them, I think.
Yes.
And I think the flow kind of bears that out. I look at Open is a perfect example of that. For Open to be ready to test $1 already is not really what you look for. So when you're talking about testing recent lows, when the recent lows were not that long ago, and they had run 100%, like that's not a setup that you want to be buying the dip on.
No, you want to, as simple as I can put it. I mean, if we're just gonna have a cookie cutter layout there, it should not be testing the first of the year. It should be testing the 1st of February. It's that simple.
Yeah.
It's really that simple. If you are in the January range, I would be very careful.
Yeah. Yeah, and we've seen this movie before. It was June lows, right?
Yep.
Where stuff that broke below that was in trouble and stayed down for a while. Net is a good example. Net had a good earnings print, broke them out of it. It was tradable again. But yeah, so we'll be on those, and it's a lot of familiar names we traded before that are in a bad spot. So I'm going to try to reflect that in my notes this week.
So this I'm just gonna throw it out there. We do have numbers this week, CPI, PPI. But I think Monday's gonna be more important with the overall banking stuff. There's some retail sales numbers, but I mean it's a big week. The Feds are supposed to be blacked out this week. I don't think that's gonna happen. I think someone has to make a statement on the bank.
They're doing an emergency meeting tomorrow.
Yeah, and they're just gonna get asked on how rates applied to this happening. Like they're gonna ask to be asked to be taken responsibility, or however you say that. Like
yeah,
that's how they're gonna be pressed, and that's just how people are. So let's get into that then. This SVM. I mean, you definitely seen it coming. In whatever you look at, like your flow and your overall market conditions. Transferring that to plays, I think people don't understand that's the actual skill. Like you're saying, you don't just short everything. But for me, this one was kind of just a watch. I wouldn't have touched this with a 10-foot pole.
Well, on the option side, you if you get the worst one right and you stay in it overnight, it might halt it the next day, and then you are trapped. When they lift the halt on something that terrible, you're probably all right. But it could keep it halted for a long time, and your money's just locked up in some option play. And then, if you approach expiration, we get into some stuff like I don't know that I'm going to learn for the first time. Like when the Russian ETF just shut down and all the options were worthless. Not saying that would happen here, but yeah, that's one thing. And then the other thing is, I'm going to just short all banks. Well, here's JPM, and they went up 2% the other day. So yeah, I think you want to be really really strategic about it.
You want to know? You know why JPM went up?
Why is that?
Know your history, P. You got to know your history. So they bought Bears and Stearns the last time this banking crap happened. It's perception that they're going to be the cleanup crew.
Nice. Yeah.
And that's all it is. Know your history. It really is. They were the bank that sucked up Bears and Stearns. I don't think they had anything to do with the Washington Mutual side of that. But that's where it comes from. It's just that history repeats itself again. I didn't see it until you mentioned it, but that's 100% what it is, and that will definitely be involved in this new bank. I mean, that's going to be the perception that someone's going to save this, whether it's the government or another company.
Right. Yeah. And so this is it's a bad time to be a mid cap. I think that'd be the first thing that stands out. And what you're seeing in the mid cap option flow is April puts ask side 15 to 20% below the current price. And I'm seeing that over and over again. And I wouldn't overthink it. I mean, that's exactly how I'll probably play it too. I think it's a really bad time for weeklies. You can see some crazy percentages in those, but those can go against you pretty fast. One sentence from the Fed that we're going to bail these people out, or whatever, sentimental will change. And also, you have to understand that if you're shorting banks, you are in a crowded trade, and when
Yes.
you're in a crowded trade, that can go against you really for no other reason than to trap some shorts. So that's if you weren't early, that's kind of what you got to be aware of, I think.
Yeah, I like selling into the crowd if possible. I don't care on the share side even. I like being there before the crowd and selling when the crowd comes. I say it in chat twice a day. Here come the socials. Um, on some of the crappy pennies that I trade off the momentum list. And
Yeah, no, I completely agree. I look for the quieter stuff. It's kind of always how I am. So with that, in that regard, you kind of look at, okay, who's impacted by this, and how's that gonna play out. So not only just who has exposure to Silicon Valley Bank, but what risk on sectors are going to be in some trouble. And then what I actually prefer is, where are they going to put this money instead to
yeah,
protect it?
that's a good
And
call.
that's where the gold and silver comes in. Um, Healthcare mega caps like Johnson and Johnson probably will do pretty well. Pepsi, like some other safety stocks, I
Sure.
think have some opportunities too.
I think when you go to the equity side, like people are going to rotate to safety, aka profitability.
Yeah,
Consistent profitability. Because I mean, that's to me, that's one of the biggest problems with this um, SVB thing is the what they're into. I spent a lot of time this weekend looking into the mechanics of the bank and who stands to lose and who stands to win. And they're calling it the billionaire bank already. I wouldn't go that far, but
yeah,
this isn't 2008 by any means. I don't think it's close. That's totally my opinion. Um, it's more like the tech bubble, um, because that's what's involved here. But it is like 2008, where it was kind of focused. 2008 was mortgage loans, right? It's a bunch of bad mortgage loans got piled together. And
yep,
this bank is basically that with venture capitalism, with startup companies. Um, on my local news, 20% of the wineries out here use that bank because these rich tech people, when they retire, that's what they want to do is start a winery. You can't get a
yeah,
loan or you can use your own money, but you can't really get a loan, a high risk loan at most banks. So they would go here. To kind of keep it short, this bank also required people to do everything through them if we're going to give you a loan, like your payroll, your savings,
yeah,
as
yeah.
part of the loan. So people that were in this bank were all in, especially if they were in debt. Um, I've read several stories about people because you don't want to listen to the people that are going to lose right now. You really don't want to listen to the people that have something to lose because they don't want to lose. They're going to tell you the way that's going to help them not lose. And a lot of these startups are cash poor, in debt. They're as Cuban put it. They need 200 million to make 100 million, and that's just not sustainable. So that's I think where the crisis is going to be. But unlike my home in 2008, all these small companies, or these startup companies as we call them, they have venture capitalists or angel investors behind them. They that's how they started. They had someone that gave them money in the first place. And those guys, if there's any value to those companies, those guys aren't going to let them fall. Again, I was in a room with Cuban for like an hour and a half, and he was like, "I'm already writing checks. Like I'm already writing checks because I don't want these companies to go out of business." So I think they're really going to get cherry picked. I mean, if you're worth, you're not going to go anywhere. Um, and if you were kind of shaky, that's a good time just to get you removed from the portfolio. And that is just one layer of the onion, but I think that's really where the financial stress came on this bank.
Yeah, absolutely. And the just your everyday person with less than 250,000, is gonna have some annoyances maybe, but that's not
No.
where the crisis and disasters gonna happen. So
So
yeah, I'm completely
so the
yes.
mechanics behind it, they dropped their earnings. The CEO sold some shares, which they have to. A lot of people think that's like egregious, but they have blackout windows. They can only sell shares at certain times. Um, and the Michael Burry guy, I think he went and did a little researching and knew they were not necessarily in trouble, but could be pressed if there was a cash run, and there was a cash run. They were a $60 billion bank. They shut the doors when they got to $950 million. That's what was taken out when they said this is too much. Um, I understand that because I went to my bank down the street and tried to get 5 grand out, 10 grand out, and it's like 3 days. And there's
Yeah,
nothing wrong. I mean, that was before the pandemic. That's just how banking works. They don't put your money in the bank in the safe and put a guard in front of it. They take your money and they loan it out. So getting it back, they have to keep their balance sheet right. They have to match up the maturity of the loans basically. So things hit at a certain time. So they do have free cash flow. And these guys did not. They did not at all. And you couple that with some pretty high risky stuff and people that need cash to operate, it put them in a bind. It really did. But as far as them like losing all their value, I just have not seen anything that says that.
right. No, I'm completely with you. And a lot of these banks too are coming off of that February run that we had, which just really kind of magnifies the downside. Like SBNY is another one that it fell quite a bit. It
Mm-hmm.
topped out at 150 after earnings, and it's $70 now. So just some real staggering losses
Yeah,
on the stocks.
I think, I mean, not to stay in what happened because I mean what happens, you need to know what happened. You probably
Yeah,
should stay up with what happened, but if you're a trader, um, it's more about what's going to happen next. And
exactly. Yeah, that's
and
why I brought that one up. Yeah,
yeah, and for me Monday, whatever the Fed does, it's gonna be it's gonna be taken into perception on I guess on how much trouble the bank's in. But if they come out Monday and say, hey, we're covering 50% of what you had right now, not the 250,000. I'm talking about the bigger accounts because those are the
yeah,
ones that are crying right now. If you had 3 to 10 million or even more than that in there, you're thinking that's going to walk away. Um,
right.
so if the Fed comes out Monday and says we're gonna cover 50% right now, give everybody 50% of their cash, and then over the next 4 months, 3 4 months, we're going to give the other 50%. I think this is we overreacted. If the feds come out and say you need to clean up your own mess,
Yeah,
um, that could start a bank run, and that's what a lot of people are fearing right now is that other banks are going to get ran, um, which is totally possible. I'm not saying it's not possible. I'm just saying that like the Lehman Brothers incident, that happened for 5 straight months, just taking out like max pain every single day. Most banks can handle a little bit of pressure. This bank in itself, I think, was just unique in not being able to handle that pressure, um,
yes.
and it really showed. So for personally me, I'm not going to the bank Monday morning, pretty much no matter what, and pulling out cash. That's not happening. I don't know how you feel about it, but that's where I'm at.
No, yeah, I'm not too worried about that. I think so. There's the crypto angle. I think it's a good time to bring this up because one of the biggest bag holders in this SIVP thing is that um, Circle, which is like
Yep.
one of the crypto people, and in particular the stable coin USDC, which depegged from the dollar, fell to like 88 cents. It's in the 90s now, I think. But so there's and while this was happening, like so Bitcoin dropped a lot, It's been pretty stable this weekend. It's even gone up some. And I think like some people are thinking that an event like this could be good for crypto because people aren't going to trust banks and they're going to want to buy Bitcoin.
Yeah, no.
It's not really the case when crypto is at the center of so many of these banking collapses. What happened with Silvergate and SBNY and Silicon Valley, has a lot of crypto. So crypto ventures are essentially a lot of them tech startups, and it's a horrible environment for that. And so why would Bitcoin not go down more? Why would Bitcoin and Ethereum kind of stabilize? Because if you got stable coins sitting in your account, a lot of people are getting out of those. Easiest way to do that is to buy Bitcoin with it. And you can transfer it out, but so I think that's seeing a concentration of Bitcoin as well. And you also, from a technical side, I think have some kind of seller exhaustion. And what I'm really getting at here is like, if anyone says crypto is any kind of flight to safety,
Run.
we should have seen enough by now to say like that's kind of a red flag. That's
Yeah.
just not that's like a utopian dream world of what they envision crypto will eventually be. There are you see people dropping their Bitcoin fees. They need more buyers right now because they don't have enough in their reserves if everyone decides to cash out.
Yeah,
So
they don't need buyers, they need cash on hand.
exactly,
It's the same
yeah,
thing. Yeah, it's the
yeah,
same thing as this bank. Yeah, 100%. The crypto bros are the weird ones right now, and I'm gonna be on this. Don't listen to people that have something to lose or gain in a
yeah,
crisis. Don't listen to someone that has. If they're gonna lose or they're gonna win in a crisis, don't listen to them because they're just gonna tell you the path that gets them to their objective. And you're
yeah.
seeing a lot of that right now. A lot. It's just people screaming about their angle. I've heard this is like the time we need to go to crypto because the dollar's a Ponzi scheme, and it's finally going to break. And it's just not true. Um, I do think that's why Bitcoin stayed so stable over the week, is because they want to show stability in it, right?
Yeah.
You don't want it to not be stable too. So the people that are pro Bitcoin want that to be at a stable amount. They don't. If it would have went to 30K this week, that would have looked bad, and if it would have went to 15K, that would have looked bad. Because there's no
Yeah, and they're like,
stability.
no, nobody cares about crypto perception if Raven coin is down 6%, whatever. I mean, it's all about Bitcoin. So yeah, you're absolutely right. That's what moves the sentiment and perception of it.
Yeah, but it's the getting off the dollar, and in the grand scheme of things, I mean, if you're a crypto person, I'm not. I mean, you know how I feel about it, especially
Yeah,
the coins that are currently out. There's countries right now that are trying to do it, that are trying to use a cryptocurrency, and the U.S. isn't going to be first. We're not giving up the dollar until we're 100% sure, and
yeah,
and when we are 100% sure, it's not Ethereum, it's not Bitcoin, it's not Litecoin, it's not Doge. It's going to be something brand new. It's going to be the American Eagle Iron Token or some shit like
right.
that you've never heard of. So all these investments, that's why I call it pet rock, because they're just the test. Some bigger fish, aka the American government and the almighty dollar, is going to come in and probably still back it with the gold standard, to be honest with you. I don't think we'll ever get off of that because it's easy to lie about. We have Fort Knox, right? It's all there.
I'm back.
Okay.
It's the browser reset. Um,
Yeah, it feels like
yeah,
like
no,
like Fort
I'm
Fort
with you.
Fort Knox is it's like we all believe there's the pile of gold in there and that backs their dollar. I mean, most people probably don't, but if you just asked it randomly, people would say, "Yeah, yeah, we got the gold over there," and
Yeah,
and I don't necessarily think that's always true. But we're not getting off the dollar anytime soon, and when we do, we're not getting off the dollar to Bitcoin. Um, it'll
yeah,
be its own
absolutely.
thing.
Yes. There's just too much. It's the real, the battle over the dollar, has a lot to do with oil, and with whatever China tries to do, and I talk
Hmm.
about BRICS all the time. Um, you know, Brazil, Russia, China, India, all that. So yeah, there's definitely going to be a lot of battles over currency, but the whole Bitcoin utopia, I'm pretty skeptical of that for the reasons you mentioned.
Yeah, they hang on to stuff like, I don't know the number, but one's created every so often. I don't know how the time frame on it, but the inflation of it is consistent, right? Like, because the Feds can
Yeah.
just print money, and Bitcoin can't do that. And people lock onto little points like that to try to sell the whole boat, and it's just, I mean, it's not realistic and it's not logical, even in my opinion. Um, but as far as the flight to safety goes, I think that's just, again, they want to put stress on the dollar because they believe in crypto. And how do you put stress on the dollar? You get people to take their dollars and put them into crypto. And I'm definitely not doing that.
Yeah, and it comes. You know, Kramer. Everyone likes to dunk on Kramer, but he made a good point the other day when he said, basically, just he's like, when is crypto going to start to trade with Silvergate instead of Nasdaq? And there's actually, it's an insightful point, because when is it that the underlying financial conditions of crypto and how shaky and scammy they are for a lot of these brokerages, like, when's that going to really come out and give us our next leg down when we see new lows in crypto? I mean, that's definitely a scenario I could see. I could see playing out, and I'm always mindful of that when I'm trading the crypto stocks, which I do every day. So um, whether I'm going to have a long bias or short bias is sort of dependent on that as well.
Definitely. And another thing I want to point out, especially for our people in general, the losers here, the losers here are definitely the shareholders. That's not federally insured. You're not getting your
Yeah.
money back.
Yeah.
That's just how it is. You're last to get paid out if they do close. Um, and the reason why I say that is that goes for any company. It's not just a bank. That's how equities work. You're taking on the risk of the equity. Um, so those guys are definitely losing. Anybody that had a large stake in the share side, um, but the money in the bank is a totally different story. So as an investor, I'd be pissed if I had anything to
Oh
do with
yeah.
this bank.
Yeah, and the meme stock mentality is still rampant, and you see people, don't treat a bank failure like a meme stock. Um, like SI, people are like wanting to buy the dip all the way down. We have the SI trade perfectly nailed, like 14 to 20, and then
Yeah.
I was like probably 20 to 0, and it looks like that's where we're headed. So
No, that was the most amazing call, to be honest with you, because you caveat that we're gonna have a 30% run up, but then we are gonna go to zero, and
yeah,
pretty much well on our way there. Um, but hey, we still get people asking us, do we buy at 20? Right?
yeah.
Like, yeah, very interesting to me. Um, yeah, I don't. I mean, I guess tomorrow's gonna tell the tale. Um, I'll just say it. It's a pretty easy barometer. 50%. Fed's got to come out and say it tomorrow, like hopefully early, that they're covering 50% of deposits. If it's less than that, people might be a little leery. If it's more than that, a little more euphoria that things can't fail. Um, but we talked about the weakness in the system, and non profitability, and this just fits that to a T. This definitely should have been the weakest link if something was going to break.
Yeah, absolutely. And it's like you said. I mean, especially if if you're a company that was forced to hold all your stuff in Silicon Valley Bank, you could be a very promising company, and like things could be going well for you. But it also means that you're not sitting on a big pile of cash. You have a lot tied up in debt and all that. You're not like Apple, who just has this big war chest of money that's free of everything. Like, so you were stuck in that, and are gonna pay a penalty in terms of your stock price for it. So I also think this is another number one thing I say about trading, or at least the top five thing is, don't chase pre-market downside.
Yes.
So that this could be a good example of that, where something takes a big gap down, and then the only way I would enter puts on it is if it sees a kind of sustained recovery, at least retraces half of that move down, and then at open you can kind of see where you want to go with it. But yeah, chasing puts is going to really burn some people this week, because whales know you want to do that, and they'll burn you.
Yeah, did you read that thread about the lady that has a company in there that I posted in chat?
Yeah, yeah, that was
Yeah,
one I was thinking of.
yeah, that's a great example. I mean, I'm reading that and like, it's just like take a chance, take a chance, take a chance, take a chance, get some help because I need more money. And then her at the end, she was like, I put a six-figure check in the bank and then tried to get it out. I was like, that's the problem, lady.
Yeah,
Like
yeah,
that is legit the problem. Is
right.
people ran to steal get their money out. I mean, you owe that bank. That lady owes that bank probably $5 million, and she
Yeah,
don't trust them. If I was in the pocket of somebody for $5 million, I wouldn't have a problem giving them six-figure check. I would feel bad that I couldn't give them more.
yeah.
Um, and she was again worried about her employees and payroll and stuff like that. But there's no big companies here. These are five to maybe in very rare cases 100 employee companies. But most of them are that 5, 15, 20, 30 employee company, all remote working. I feel bad for their vendors if they can't if they don't get that 50% cash I'm talking about tomorrow, because and the employees, because they're not going to get paid, the vendors aren't going to get paid, and then that's going to kind of roll downhill to the fourth level of that onion. Those guys definitely don't deserve the hit. Um, but an overall, like that's going to roll out into bigger companies. Just bigger companies are going to look at this as an opportunity to cherry pick the good ones at a way lower evaluation, because that's obviously the elephant in the room. Evaluations on these companies are just ludicrous, ludicrous, and they're going to they will have and are going to continue to come back down to earth.
Oh yeah, and I know people who work in startups, and like on the software side, and a lot of them, they they kind of expect the company they're working for to fail, or have issues, or whatever, and they tend to job hop a lot, and
Yes.
they're like, I put 6 months of salary in the bank just because I know that this kind of happens. So it's it's definitely a strange work environment compared to what I do, which is like working at a state college and university, um, with the 403B and all that stuff. But so yeah, a lot of the workers, this kind of nature of the environment. It's just when something like this happens, that's big. It definitely gets the public attention, and then public sentiment on bailouts is it's going to be kind of a black and white issue. A lot of people are just going to say screw them without thinking about what that could mean, um, as a kind of domino effect. So,
Yeah, I
um,
don't think we should bail them out, but I definitely think we should be backstopping them. And there's a difference.
yeah, right,
There's a big
exactly.
difference there. So, and there's like 50 people in this country that could just buy this bank cash. I mean, it's not that big. It's not like a Bank of America. It's not even like a Wells Fargo's, to be honest. It's just not. It's not as entrenched in our overall banking. They're definitely a unique niche, in my opinion. And the cash is there. I mean, they have the assets. They just don't. They just can't get them now, right? Like the money's there. It's not like they lost all the money. Um, it's just the way the maturity of things line up. They can't give you $1 billion tomorrow, but it's there. If you mature all the loans and stuff, if someone bought this bank tomorrow, covered it with their own cash, they would probably triple their cash value in 5 years. And I think that's missing here. We're not at a like we're not at the. That's why I don't compare it to the Wells Fargo 2008 2009 stuff. This is more like the tech bubble, because those guys are going to be the ones to get wiped out. And that's just, again, that's just totally my opinion.
Oh, absolutely. And yeah, one more specific ticker to mention here, kind of in line with what we said about retracing to the downside. It is a bad time for SoFi to be trading under $6.
Did you see the CEO?
Yeah, I did.
He
Yeah.
tried to come out and save it. Like, we're good. That's what that move was in retro. So, you know me, I'll call the play afterwards. But he put $1 million
Yeah.
into his company saying, hey, I believe.
Yeah, they would be better off if they had a little more runway to the downside, because at low to like $2.50 a few months out, that's not just a lotto. I mean, that definitely could happen if they break below 450.
Did you see where we bounced Friday?
I did. Yep.
528, bud.
Yep.
RTL.
Oh yeah, yeah. That's where like the day trade side of things definitely. You can keep hitting that, and then it's when that major level breaks down that we really get into.
That's what I want to talk to. I mean, not to get into a ticker too much or a person too much, but shout out to fucking Tony Anthony. I love that fucking guy, dude. Asking all the right questions. But talking about lines, I mean, you had 2 hours on 528 on SoFi before you got a little relief. And as a day trader, that's what I'm looking for. I do think, though, if they had a similar situation, they would have trouble. If people run to SoFi on Monday and start pulling cash, they will be in trouble.
Yeah, because they've got the student loan time bomb that they're dealing with too.
Well, they haven't been getting paid for 18
exactly,
months.
Yeah. Yeah.
Yeah, no, and they're complaining about that. Like, sir, will you please let me give my money? That's a whole nother can of worms. But I'm just saying from a banking standpoint, because they have that I forgot, I think it was 3% checking. Like they sold the instead of me capitalizing like Bank of America off your money, and I only give you 0.5% in savings, I'm going to give you half of it. I'm going to give you 3 of this, 5 to 6% we're at, just to get money into their bank. And if people come start taking it out, they will be that will put SoFi under pressure 100%. And I think that's where the 250 comes in, is if they have that situation, it's going to look like they're not stable. Yeah, I think you're nailing the head there. It's funny that people are betting on that already, which is what your option flow is, correct? I mean, that's
yeah. And the timing too. It's like this is going to be an event that goes on for months, and so we're going to buy options, accordingly into the summer and all that. So yeah.
Well, they're not stupid. They don't buy weeklies.
Right. Yeah, they sell weeklies.
Exactly. Getting a little. You got something else you want to talk about?
No, I think we're good.
Let's do SPY real quick. I don't want to miss that. We both had us moving to the upside last week a little bit. Let me pull the chart up. Which I think we were on our way until this banking stuff happened. I mean, we were holding 400. You were 392, 411. I was 408, 395. So pretty much same range, just a little tighter. Our top end was 407. And our bottom was wherever we finished Friday. So
yeah,
I think we're about $10 off to the downside. But again, I don't think on last Sunday we might be good, but we're not predicting a bank to collapse during the week. That's just not happening.
No, yeah. I mean, I think I had a kind of midweek adjustment to the downside, and but there was really no way to know that
last week. Yeah.
Happened. Yeah.
So what do you got this week, Pete?
Well, I think interestingly that like the way that they propped it up does give us some room to the downside, but it's going to get kind of sticky at 380. Okay. So I think that's going to be tough to break. Although I think we do, but it's going to take some time. There'll be some bounces. So I'm going to say like 377. Is going to be my downside the week, and I'm going to say like 392 would be my upside.
392, like it. I mean, it's totally the question, like, what's the Fed going to do and how people are going to react. That's what you're asking in this chart, in my opinion. Um, I'm with you. 380 sticky to 370 sticky. That's the range. 370 breaks. We're in a whole nother ball game. Um,
Yeah.
that probably doesn't happen in this week, even with pain. So I'm gonna go. I hate going right. I hate going right with you. I'm gonna be a little positive that we're gonna help. And I'm gonna go that we don't break that 381. Um, in regular market hours, don't count pre-market. And top side, I'm gonna go 395. So basically, just a little. I mean, not much above you, but that's that volume P number again. Um, yeah, I don't know if this is a hiccup or if this is a 3 week event. Like, I really don't know how the market's going to react, and that's what we're basically asking right now. Correct? I mean, that's how I see it.
Oh yeah, absolutely. Um, and I, from a TA perspective, I don't even know what this is called, but a lot of times you get a big fat red candle. The middle of that candle is a kind of area of interest,
Yeah.
and that would be right in between our two upside numbers. So like be 393 and change. So that's going to be an area to watch. That's a kind of a concentration of option strikes happens at 392 and 395. So at yeah, definitely will be an area of interest. And it's one of those things, like, it's going to really piss off a lot of bears when we do get any kind of rallies this week. But it's definitely probable that we get a few here and there.
Oh, definitely, definitely. Does this have? I mean, you'll know better than me, but does this make it a better week to trade SPY SPX, or is it better when it's more like of a consistency, like a consistent move? Because there should be
No,
some range.
it was definitely it was better because it really the uncertainty really juices the premiums on it. So
Okay.
you are going to get like a bigger move in your contracts during the day because you're buying you buy early in the day, the IV's a little lower, and then you get these dramatic moves. VIX goes up, and it just really that's where you get those 300% contracts and things. So no, it was a great week for SPY, and it's it's not good every day. From what I mean, people say that, but to my experience, it isn't, because you're kind of counting on these 0.2% moves where
Yeah.
you get something more more dramatic like this week. It's definitely a lot better.
That makes sense because Pox said Friday like you could straddle. I think it was 393.85,
Yeah.
and you won both of them, like
Yep.
the upside and downside. So that makes a lot of sense. Awesome. You ready to get to work, or you got something else? You ready to get to work?
Yeah, I'm ready.